I'm Nick Lequier from Mortgage Wellness. Most of our realtor clients are asking this. How do increasing interest rates affect you and potentially your buyer clients? So I created this scenario to show you an exact example of how it might affect the buyers that you're working with right now. So I call it Jack and Diane. Jack and Diane are first-time home buyers shopping for their dream home.
About Jack and Diane.
Now, Jack and Diane came into our office on January 1st to talk about their home buying needs, and I pre-approved them at that time for $750,000 as a purchase price. Now, they have a household income of $150,000, and they've done a really great job of saving up for their down payment. They have $50,000 available. So on January 1st, they were able to secure a really great 5-year fixed interest rate of 1.74%. Now, you heard that right. Fixed rate, 1.74%. Now, let's remember that was way back on January 1st, okay? But what's really important to this scenario as well is that we qualified them using the stress test rate, okay? What we call the benchmark rate, 5.25%. That's what led them to a $750,000 pre-approval. So, at the time they were looking for a townhouse, but the market was moving too fast for them. So even though they were qualified for $750,000 and the payment at say $2,900 a month plus property tax worked really well for them, they sat on the sidelines like most buyers because again, the market was moving too quickly for them and they couldn't really find a home that was even available. So they came back in to see me because their rate, their pre-approval is expiring on May 1st. So the really important takeaway from this conversation is also that pre-approvals are good for about 120 days. So again, with theirs being put in place on January 1st, the rate is set to expire on May 1st. So they came back in to see me just today actually. We secured them a new interest rate of 3.84% for a 5-year fixed. So they had 1.74, their new interest rate is 3.84. But here's the thing as well. They now have to qualify at a benchmark rate of 5.84%, 2% over their actual rate. We call that the contract rate in our industry. So they got a rate of 3.84. They have to qualify at a little bit of a higher rate, right? That stress test, that benchmark rate is now a little bit higher. That means they now only qualify for a $700,000 home. Their budget has gone down by $50,000. But take a look at this payment, right? The payment is now $3,400. So although they qualify for less, they're going to pay more monthly for that home. So they need to qualify at a higher rate, plus they get a higher rate, plus their payment is going to be higher. So really in summary, their interest rate has gone up by 2.1%. Their decrease in budget was $50,000 and their payment has gone up by $450 a month. So here it is just sort of in comparison, right? January 1st, 1.74%, $750,000 purchase price, $2,900 a month. They come back in upon the expiry of their pre-approval. They get a higher interest rate, their budget has gone down, and their payment will have gone up. So the story is this. If you have buyers in your pipeline, and maybe you're even showing these buyers, homes today, they may not qualify for the homes that they're viewing, okay? So as interest rates continue to increase, not only are the rate and payment going to increase on those homes, but the amount that they qualify for could be decreased. So if you have buyers in your pipeline, reach out. I'd be happy to answer any questions about how their budget could be affected by increasing interest rates.